Here's my personal 90% win rate, fully verifiable strategy used by thousands of others to get the same exact results as me. I destroyed the markets using this one single strategy that I have been using for years. And by the end of this video, you will know the full breakdown of my 3-step strategy that I took 6 years to perfect. I have simplified the strategy while maintaining an extremely high win rate. So beginners who have just started trading, or even advanced traders who have been trading for a very long time, will understand how to start winning trades every single day. So take out your notebooks and start paying very close attention to the knowledge I'm about to give you for free. For those of you who don't know who I am, my name is William and I am a full-time, multi-6-figure funded trader. You guys might know me from my live streams that I do twice daily. So obviously I know my shit, so listen up. Trading is extremely difficult and this is because the market is always hard to predict. In order to succeed, you will need a solid strategy instead of hopping from one strategy to another strategy. There are two main types of trading: retail and institutional. Retail works best on the higher time frames, whereas institutional, such as the SMC and ICT, works best on the lower time frames. This is because price tends to respect retail factors such as key levels, trend lines, more on the high time frames, as compared to the low time frames, where prices are actively controlled and pushed by the institutional SMC and ICT traders. Personally, I prefer retail trading, as I am a swing trader, where I mainly enter trades on the high time frames. There are 3 main reasons for this. Number 1, I can be strict with my setup criteria. Trades don't come by as often as compared to the low time frame. So when a setup comes, I know for sure it has a higher chance of going in my direction. Number 2, there is less noise in the markets. On the low time frame, there's going to be a lot of fake ups, a lot of quick movements that will stop scalpers out of the market. This strategy allows me to ignore the noise created on the low time frame, allowing me to swing trades that net me 50, 100, 200 or even a casual 300 pips in profits. Number 3, there is way less stress in swing trading compared to scalping. And this is because the trades that I take naturally have a wider stop loss, allowing for price action to play out without stopping me out because of a minor impulse move. On top of that, all I gotta do is find 1 to 2 good trades a day instead of having to scalp 5 to 10 trades every single day. That's fucking stressful. Think about it, the more trades you take a day, the lesser quality they are. In a day, you make 35,000 decisions on average, and trading is just one of the high quality decisions you make each time you take a trade. So the more trades you take, the lesser capacity your brain has to make high quality decisions, directly impacting your win rate. However, I do not just use any random retail strategy. A standard retail strategy on its own is very rudimentary and basic in general. They rely mainly on basic technical tools such as your standalone trend lines, your standalone candlesticks, or even the standalone key levels. And these will only fetch me a 40 to 50% win rate. So instead, I came up with my own signature retail method that will allow me to win 90% of the time, along with all 1,500 of my premium members, and I call it the William Certified Range Strategy. Before we go into the exact steps of the strategy, we first need to know what a support, resistance, and a range is. A support is an area where price has failed to break below multiple times, creating a price floor that the market is currently respecting. On the other hand, a resistance is an area where price has failed to break above multiple times, creating a price ceiling that the market is currently respecting. A range is when price hovers between 2 key levels, mainly between a resistance and a support. Range trading is when traders sell at the resistance and buy at the support. So what makes a William Certified Range, or WCR in short, so special is that it is made up of 3 main criteria. So number 1, the range must be on the 1 hour, 4 hour, or the daily time frame. So this is just because price tends to respect the higher time frame. So let's say, for example, let's take a look at Euro USD. Okay, if I take out my measuring tool, we look at the average size of the 4-hour candle right over here. Okay, you can see it's about roughly around 46 pips. Okay, as compared to those on the 5-minute time frame, the 5-minute candle. Let me measure. Bring up my tool. Okay, right over here, it's roughly around 11 pips. So what this means is that it is harder for price to be manipulated on the higher time frames as compared to the lower time frames due to the increased pip count. So the thing is this, how manipulation works is when price is purposefully moved to hit your stop loss, and then it proceeds to play out according to your analysis. So this only happens because trading is a zero-sum game, meaning that if you lose money, it means someone else won money. If you won money, it means someone else lost money. So in order for the big boys, the big sharks, the big traders to make their money, they will need to stop us retail traders out. So thus, manipulation occurs frequently on the lower time frame, where it is easier to move price due to the lower pip count as compared to those on the higher time frames. So this is why it is more likely for the range to be respected on the higher time frames. So let me just show you a few examples, okay? So let's just take a look at GPP JPY, or GJ in short. Okay, you can see, let's compare how price moves in the higher time frame versus the lower time frames. So you can see on the high time frame, right now we are on a 4-hour chart. Okay, you can observe that price actually moves very smoothly right over here in one consistent fashion, bouncing between the resistance and the support, okay, as compared to the low time frame. So let's go down to the 5-minute. You can see right over here, as I have circled initially, that price is actually extremely choppy, very zigzaggy, and price is unsure where to go, and there are many wicks rejecting up and rejecting down. So what this means that price is extremely choppy, okay, and it signifies stop hunting and manipulation. Okay, that's number 1. Criteria number 2, okay, the range must be at least 100 to 150 pips wide. So what this means is the difference between the resistance and the support is at least 100 to 150 pips. So an ideal range occurs when price moves smoothly from the resistance to the support and vice versa. So what does this mean? Let me show you. So as I said, in order for a range to happen, okay, there must be enough space for price to move in. Okay, let's take a look at CHF JPY. When price is at least 100 to 150 pips, price will move smoothly like this. Follow my cursor over here, the yellow line. It bounces between the resistance and the support, in one straight line, one straight fashion. Okay, if the range is lesser than 100 to 150 pips wide, it would tend to look like a cluster. And this is where manipulation or stop hunting usually occurs. So let me give you an example. Let me show you what does it look like. So let's take a look at CAD CHF, or the Canadian dollar versus the Swiss franc currency pair. Okay, you can notice we are currently on the 4-hour time frame, and price is hovering between a resistance seen over here and a support as seen over here. However, take note of this difference. Even though price is ranging between the 4-hour resistance and the 4-hour support, you can see that price is actually moving very choppily, very zigzaggy. A lot of wicks rejecting up and down. Okay? And the pip count of this range is only 53 pips. This is a clear indication that price is actively being manipulated and stop hunted. Now, let us move on to criteria number 3. So number 3, there must be at least 2 points of contact on both the resistance and the support. So the more times the key levels are respected, the stronger the key levels are. If both the resistance and support of the range are rejected at least twice, this means that they are strong and price is most likely to stay within the range. So let me just show you an example of how a strong and weak key level work. So let's look at this example, USD CAD. Right over here, you can see that there is a key level form where price has rejected once at the 1.365 level. Okay, price made a movement downwards, tapped this level over here, and then it bounced back up, signifying a rejection. However, this is just a one-time wonder. Okay, you can see this is a weak key level, and the reason is because every subsequent time price meets this key level, it just breaks through it as though it is not there at all. So what does this mean? Is that this level is extremely weak, it is no longer respected, okay? And that is why price breaks out of this USD level or the USD range easily, okay? So now, let me compare it with another example. Euro JPY, let's take a look right over here, okay? Notice the difference? You can see that price, okay? Every single time, price taps the strong key level over here. 1 time, 2 time, 3 time, 4 time, multiple times. Every single time price taps the 158.5 level, it gets rejected. So what does this mean? This means that this key level is extremely strong, and the likelihood of price being rejected once it touches the key level is extremely high. So this is a strong key level, and that is why price remains in the Euro JPY range and it continuously respects its key level. So when all 3 criteria are met within the range, a WCR is then formed. You will win 90% of the time when you buy at its support and sell at its resistance. So now, let me just show you some examples of the WCR. So example number 1, let's take a look at CHF-JPY. Okay, you can see right over here that CHF-JPY is currently in a range. So let's check out for the WCR criteria, the 3 main criteria that I have explained earlier. So criteria number 1, we need to check whether price is within the 1 hour, 4 hour or the daily time frame. You can see price is currently in the 4 hour time frame. So criteria 1, check. Criteria number 2, the difference in pips between the resistance and support must be at least 100 to 150 pips wide. So let's take a ruler and measure the difference, and you can see over here that the difference is roughly around 180 pips. So it absolutely smashed criteria number 2. Criteria 2, check. And the third and last criteria, which is the 2 points contact on both the resistance and the support. So you can take a look over here. You can see the resistance has been rejected at least twice and the support has been rejected at least twice. So now all 3 criteria are fulfilled. This means that CHF-JPY is a Williams certified range, and I will be trading it by looking for buys at the support and sells at the resistance. So now you can see over here that price is currently hovering near the 4 hour support. So that is where we can take our entries over here, okay, and place our stop loss under the support and our TP placed at the resistance. And let's watch how this plays out. And bam, TP hit. Now here is the beauty of the WCR. Okay, you can see price is currently at the 4 hour resistance now, and that is where we can look to flip our positions and look for sells at the resistance. So re-entry is over here, our TP be set at the support, and our stop loss we place above the resistance. And let's watch how everything plays out. Okay, tapped in, bam, TP hit. Okay, you can see this is the power of the WCR. So now let's take a look at the next example. Okay, now let's take a look at Euro JPY. Okay, you can see it right over here. Price is currently in a range as well. So now let's do our 3 main criteria check. Criteria number 1, okay, yes, it is ticked. Euro JPY is at a 4 hour time frame. Criteria number 2, okay, is it at least 100 to 150 pips? And let's take a ruler to measure. Yep. Okay, it is 145 pips. We absolutely met that criteria. And criteria number 3, is there at least 2 points contact on both the resistance and the support? So now you can see over here, resistance has been rejected twice or even thrice, in fact, and the support has been rejected twice over here. Now we see that Euro JPY has met all 3 criteria of the Williams certified range. Now, okay, we can look for entries, same thing like the previous example. Okay, shorts at the resistance and buys at the support. Okay, right now you can see that price is currently hovering at the 4 hour resistance. So that is where we can set our sell entries right over here. SL is placed above the resistance. TP is placed right at the support. Now let's watch how this plays out. Okay, and bam, TP hit. Next, you can see that price is currently at the support of the Williams certified range. That's where I will flip to look for buy positions right over here. SL is placed under the support. TP is placed right at the resistance. And let's take a look and see how everything goes. And it's playing out, and bam, TP hit. Okay, and that is where the moment TP hits for the support, right, from the buy position, that is where we can look to flip again, right, towards the downside to short at the resistance over here. Okay, SL, same thing, placed above the resistance, TP placed at the support, and watch how this plays out. And bam, TP hit once more. Okay, and that's where you can look to flip again and again and again. So that is the beauty of the Williams certified range, whereby you can consistently look for entries, okay, where you can buy at the support and sell at the resistance, as long as all 3 criteria of the WCR are met. So what I have shown you was proof on how to utilize the WCR and how it works. So now that we are done sharing with the examples, I want to give you a bonus for staying this long. So I will be sharing with you more on how to further increase your win rate with this WCR strategy in 2 main points. So point number 1, the first way to increase the win rate is to use fundamentals to identify the overall bias. So as I said, okay, trading is not all about technicals. I will be lying to you if I say that. Okay, in fact, fundamentals give me an additional confluence when I look to enter my WCR strategy. So let me just give you an example. The USD is fundamentally bullish. On USD XXX pairs, I will be looking to buy at the support zones of the WCR rate. On XXX USD pairs, I will look for sells at the resistance zones of the WCR range. So the opposite will happen if USD is bearish. So this will help to boost the strength of the key levels of the Williams certified range. So how do you tell if, let's say, a country like the US is fundamentally bullish or bearish? Very simple. I personally use forexfactory.com to give me the information on the fundamental sentiments. So the one key thing to take note of when trading will be the high impact news. So how do you know when this high impacting news will occur? Simple. They will appear in Forex Factory as red folders. So for example, you can see over here, look at my cursor, there are a few folders that are red. Those are high impacting news. Okay, and you look towards the left, you will find the currency that is affected by such high impacting news. Okay, so what you want to do is to wait for news to pass and then you look at the results. Let's take for example USD, preliminary GDP quarterly data. Okay, you can find that there is a actual, forecasted and previous results all over here. So if you click into it at this folder, okay, you will see that under usual effect, actual greater than forecast is good for currency. So what you want to do is, let's say, okay, the moment news comes out, the actual data comes out, okay, over here, if the data and result is better than the forecasted, this means that news is favorable for the US dollar, hence therefore the US dollar is bullish. Or alternatively, everything over here is color coded, so if you see the number over here is green, it means it's good for currency. If you see the number here is red, it means it's bad for the currency. So in this particular case, for preliminary GDP, it is good for the US dollar. So what this means is, since the data comes out better than expected, this will cause the US dollar to strengthen, to pump, which will then in turn result in pairs like USD JPY to pump and XAU USD to dump. Okay, if the results come out worse than expected, then the vice versa will happen. So of course, other than relying on red folder news, we can also look for other macroeconomic data to figure out the fundamental direction of the currency as well. So one of the key factors you need to take note of is interest rates. Okay, interest rates determine the strength of the currency. The higher the interest rates, the stronger the currency, and vice versa. Okay, so let's say, for example, back in March 2022, the Federal Reserve of the United States of America began hiking the US interest rates. Okay, so from then on, the USD has been pumping up in a strong bullish uptrend. This can be seen by a huge pump in price in the US dollar index, or DXY in short, which measures the strength of the USD. Okay, a huge pump can also be noticed across all USD pairs since then. Okay, now, so let me share with you on how you can incorporate fundamentals into the Williams certified range. So now let's just take a look at USD JPY. Okay, price was fundamentally bullish the moment the Fed announced interest rates hikes back in March 2022. So from then on, we can enter buys every single time price touches the WCR support, as you can see right over here and right over here. You can look for longs, and you notice that most of the time, if you enter buys at the support, you will win, okay, as the fundamentals help to strengthen this very strong 4-hour support of the Williams certified range. Look here, there are so many gurus with strategies out there claiming high win rates, but none of them can back it up by trading live in front of thousands of viewers twice a day. If you can find someone like that, good, but if you can't, then you should definitely check out our Telegram group, where we give free signals daily and all of our recorded trades are updated there every single day. There is also an educational channel where we cover more in-depth on other confluences that you can use together with my strategy. These include things like Fibonacci usage, supply and demand concepts, and many more. So check out the link in the description box below, or find the link in our pinned comment to join a family of 30,000 traders worldwide. If you want more of these types of educational videos, Smash the like button below and subscribe to our channel to stay updated when we release new videos every 2 to 3 days. Most importantly, click on the notification bell to get updated when I go live twice every weekday. That's all from me, William, signing out.